Okay, in this video, we're going to talk about a picture-perfect setup, and I removed all of the drawings, the indicators, meaning text indicators, where I'm drawing the different phases of this accumulation phase, all of the little markers and things that I put on the charts to inform and keep myself informed that I'm looking at a possible setup. This is actually Japanese yen futures. So I'm going to walk you through this entire process of marking up this particular chart so that you can see the picture perfect process and then find the entry with the point and figure. And before I do that, I want to show, bring to your attention, this is accumulation schematic number 1. And you're going to notice the same behaviors and the same locations, the same structure that we have here on this chart. So you have the move to the downside, and then you have the pullback, you have the selling climax, you have the automatic reaction, you have B, phase C, and then phase D in the breakout. So we're going to review all of that, and I'm going to show you where it is on the chart. This would be a really good opportunity to turn this into, let's say, a homework exercise so that you can go back to this particular chart. If you have not yet downloaded the Thinkorswim platform, please go into the membership section. And I believe it's in module number 1, and you're going to see a video there that explains exactly how to download the Thinkorswim platform and then how to set up the charts and to find the same charts that I'm using when I trade Forex. Again, this works on all market, in every market. It works on all stocks, it works on all crypto, it works on all Forex, all commodities. It doesn't matter. It's the same basic behavior. So again, this would be a really good exercise to do the homework so that you can follow along with me and try to mark up your charts just the same way that I do. There's also some links so that you can download these indicators. And this right here is just the moving average volume. And then this is my wave chart down here at the bottom, my wave indicator. So let's go ahead and I'm going to pause this and then I'll put all of my markers and indicators in here so that you can see exactly what's going on. And then we'll look at the point and figure and find the entry and see just how perfect this whole trade worked out. Okay, now I've got everything marked up. These are all my indicators here. Phase A, Phase B, Phase C, there's the spring, Phase D, the move, and the new markup phase. Again, as I mentioned, this is Japanese yen futures. So this is not dollar yen, it's Japanese yen futures. So I'm just looking at yen strength or weakness. When we see price moving down, it's yen weakness. When we see it moving up, it's yen strength. So the dollar yen, in this case, if the yen was weakening, the dollar yen chart would actually be moving to the upside. And when we see yen strength, the dollar yen chart would actually be moving to the downside. So I want to warn you about that before we actually move on and we take a look at the point and figure chart. So again, if you've followed along with this, you already know that this is exactly what it looks like and how we're processing this information using the Japanese yen futures. And with the euro dollar and the pound dollar, when I'm using euro futures and pound futures, it is what it is, and it matches up exactly with what I see on the pound dollar or the euro dollar. If the pound strength is moving up, then the pound dollar is going to move up. If the euro futures strength is showing more strength, it's the euro dollar is going to continue to move higher. So you can see how it does get a little cluttered in here, but you've got to be aware and you have to be able to identify these different areas and within this phase of consolidation. And the reason that we do that is, again, we need to see certain behavior and we need to be able to track that behavior, and we're watching volume. And these clues are what help us determine whether or not we're going to see a reversal and a breakout and another move, whether it's going to be and a sustainable move, whether it's going to be to the upside or the downside. So again, there is certain behavior that we need to identify and confirm before we can label phase A, phase B, phase C, and D. That's very, very important. So again, this would be a great exercise for you to do this on your own, mark up the chart and see if you can do it the same way, and then come back to this video and watch to see how this is working. And these, the schematic that I showed you just a moment ago, that is inside of the membership area. So you should have already printed that. If you haven't, you don't have to, but if you have, you can just kind of line it up. But see if you can do this without looking, based on the experience and the knowledge that you have already, and then come back and test yourself and see just exactly how you would have marked up this chart. Now, what I'm going to do here, what helps, now this is great to be able to identify the phases of consolidation, but in order to have additional confirmation, I'm looking at and tracking volume, right? That supply-demand battle constantly that we see. And it's going to accelerate, or it's going to show, and we're going to see more volume in certain areas as opposed to other areas of that range of consolidation. And this entire process is going to take some time. Remember that smart money is going to take some time to accumulate or acquire at the lows. That's why we see these opportunities, and that's why a lot of people get trapped into these. For example, they'll think that this is like a move and a break to the downside, so they short it, and then it reverses and goes back the opposite direction because they are completely unaware of what's actually taking place here if they just understood this structure. So this structure is what repeats over and over and over again before we see either a markdown phase inside of distribution or a markup phase in a range of accumulation like this. It has to be done in this way or it will not work. And that's why it works over and over and over again in every stock and every market everywhere. There are obviously going to be some times when it just doesn't look right and it's not setting up. Maybe it could be that you have a limited amount of experience. And at that point, if you see something that doesn't make any sense in it, you can't identify and you can't calculate everything that we're looking at here, then my recommendation is just to stay away from it because eventually one is going to surface just like this. It could also be due to the time frame. You could switch it up and go to a different time frame. This, by the way, is a 30-minute chart. So what I'm going to do now is I'm going to mark up the chart with the way I count the waves, and I want to show you how this area and this spring was not only obvious here based on the phases of consolidation and the analysis of that, but also the way the market and the volume was actually behaving as it came back down one more time to test support before it reversed and went the opposite direction. So you've probably heard me say this. If you haven't already gone through at this point in the membership course to hear this, we get in with a spring and a test of the spring or a breakout and then a test of the level that it broke out of, which is this backup action right here. This actually, it looks perfect right there, and it's that one candle right there where it went right back down, tested it, held, and then continued. And then that was just one little blip with the backup. We need to see these backups. We need to see these tests because that confirms that we're trading in the right direction and the trade's going to work out. Let me go ahead and draw in the wave activity and calculating the amount of volume. And I'm going to go ahead and open it up here because we're really concerned about what's going on over here on the right-hand side. That's going to be the most important issue. And then to determine that this is going to be a reversal. So I'm going to pause this, and then you'll see the way I've marked up the charts with the volume. Okay, now I've marked it up with the volume. So what we have here is the activity here inside of phase B, and then we've got the spring down here at phase C. We're looking for a couple of different things. We're going to be paying attention to, I'm going to see if I can open this up one click. We're going to be paying attention to this, to the range of that candle. They're not always going to look like some kind of flat little, candle like this. I mean, sometimes they're going to, it could be a long range bar or candle, depending on which one you're looking at. It could be a wide range from high to low. Pay attention to the way it closes, where it closes, and then the amount of volume behind it. But we have one price swing right here. I'm measuring the wave. I'm counting the waves. So we've got one wave right here, 30-minute chart. So this is an hour and a half. We've got 5,445 contracts within this one wave here. A lot of activity, yet no result, no reward for the amount of activity and the participation that was taking place at this time. I also want to pay attention to the time of the day. So the time of the day, this was during the London session. So a little more active, right? We've got more people participating at that time. This is, however, Japanese yen futures. So I need to be paying attention to that. But you'll notice where this previous bar closed, there was more volume on that one than this flat candle here. And still no follow through based on the amount of energy and activity was spent on this move trying to drive it right in and through support. It didn't work. So this is a clue right here before we even start thinking that we're going to get a trade. It could potentially be the spring, but we don't know for sure. And then this reversal bar right here, this one single bar right here, that has the most volume in it than we've seen for quite a while since the market had opened for trading during the London session. Now, obviously, this one right here, this was just before or at the London Open. We've got two candles or two bars here totaling 75, 80, 85. But this one bar right here, one bar by itself, had 3,578. So that was a clue to sit up and pay attention. And then we get this pullback right here, but it doesn't go very far. This bar right here has a total of 3,636. Now the distance from where it turned around and we had our first bullish bar to this last candle, this one right here is live, but I measured all of this and you can see there's 55,940 contracts traded. This bar right here has a total of 12,745 and this bar right here has 52. So you can see that the momentum was picking back up and bringing us back into this opportunity. So these pullbacks and these tests along the way, we have our breakout. Here's another test and it holds. This bar right here has 5,100. There's still quite a bit of activity and participation. It's still a lot of volume. Now, keep in mind, we talk about this quite a bit, that some people who are inexperienced looking at volume and looking at price, the relationship between what they see in the price pane and the volume indicator, a lot of times they think that there has to be more volume in order for price to keep moving higher, and that is not always the case. In this case, it will certainly help to confirm it, but it is not. You'll see that many, many times in the membership course where we have all of the volume on the reversal down here on the break, or the reversal, sorry, I should say the reversal, and then sometimes on the break. But in order for price to keep floating higher, again, when supply has been picked up and there's not a whole lot left, it doesn't take a whole lot for price to keep moving higher. Keep that in mind. But in this case, again, we saw more volume and it did help. It certainly helped with the confirmation of this move to the upside. So let me tighten this back up and we can take a step back and look at the whole thing. So here we are. We're counting the waves. Now, I do count the waves along the way. I do count, like, for example, this wave that moved right into preliminary support. This next move right here that actually created the selling climax, I would count that because it gives me a point of reference. I want to see more activity over here on the left-hand side, and then I want to see it sort of flatten out. You can see the volume. It kind of flattens out here inside of phase B, and then it starts to pick up back up a little bit when we get that secondary test, and then it starts to move back into phase C, and then we get more activity over here as we start to see price and more participation. Now we're going to go to the point and figure chart. So here is where I'm going to leave you so that way you could do your homework on the first chart, which is the bar chart or the candlestick chart. You use either one using volume and then counting the waves, 30-minute chart, Japanese yen futures. This is the point and figure for the dollar yen. So here is my entry, and that entry is at 79. It's gone as low as 41, which is a very good trade, even if it's sitting here at 50, right? We do expect that it's going to go lower, but we are taking profits along the way. We have a conservative first count, first target, and then we have an overall target, which is based on all of the data here that we have as far back as we can count. I know that this looks a little interesting because this is what I was talking about a moment ago. What you're going to see is the move in the previous chart here. This is just Japanese yen futures. There's no dollar paired to this chart, just Japanese yen futures. So when we see Japanese yen strength, we're going to see the dollar yen move to the downside. When we see the dollar yen move up, that's dollar strength and yen weakness. So it's the exact opposite. It's just a matter of, getting that understanding, that basic understanding. And it's easy to do. It's not confusing. It's just, it might be a little bit different the first time you look at it. Now, when we look at the pound dollar and the euro dollar, again, when the pound dollar is moving higher, so is the point and figure. Same thing with the euro dollar. And then the same thing with the futures when I look at pound futures and the euro futures. They're going to move higher. It's going to show euro dollar chart moving higher. This is the only one that is going to move in the opposite direction, this one in the dollar Canadian. So back to the initial setup, it all starts right here. Being able to analyze this range of consolidation and being able to determine, are you looking at a range of accumulation or distribution so that you can determine which direction you're going to participate in and you don't end up on the wrong side of a breakout. Remember, down over here with this spring, it may have looked like at one point, especially on a really small time frame, that it was going to break and go lower. The trend had been to the downside for the most part. And then it turns around and it reverses and goes back up again. That reversal process is all part of the accumulation process from smart money, accumulating at the lows before making this accelerated breakout to the upside. And then corresponding all of that with the time of day, the New York or the London and the New York session, it's just going to keep on powering higher. It doesn't work like this every single day where it just keeps, floating higher one candle after another for 3, 4, 5 hours, but it happens often enough to be prepared for it, and it worked out just fine. This was a relatively short trade for the most part. It wasn't something that we had to sit and babysit for a while, 8, 9, 10, 12 hours, and then wait for pullbacks. It's been pretty smooth for the most part. So if this helps, let me know if you have any questions. I hope this helps, because this is exactly how and why price moves in every market, on every chart, on every time frame. Doesn't matter. Stocks, crypto, options, it doesn't matter. This is how it works. Forex, this is how I do it. I hope you learn these strategies, because they will change your trading for the better. It did for me. If you'd like to learn more, if you are not in the coaching program, you can certainly click the link just below this video in the description, and it'll take you straight to the page where you can learn more about my online coaching course, and you can certainly join if you're ready and you feel that this is something that would help you. Thanks for watching.